All right, so we've got this whole stack of articles you sent about the stock market. You're really trying to get a handle on all the trends, huh? Maybe even looking for a few good investment opportunities, right?
Yeah, sounds like it.
Well, today we're going to deep dive into this one. It's called The Smart Investor, Navigating the Current Market Landscape and Identifying Opportunities.
Okay.
I thought it was really interesting because it talks about those companies that are doing amazing, but also the ones that are kind of struggling.
Right.
What really caught my eye, though, was what it had to say about NVIDIA.
Oh, yeah,
I mean, they've been like the golden child of the market,
for sure.
but it seems like there might be some trouble brewing. What did you think about that part?
Well, first of all, you're totally right. NVIDIA's been killing it. This article even says that their revenue growth year over year has been 78%. Like, seriously impressive.
Yeah.
No matter what industry you're talking about, that's huge.
78%.
Yeah.
No kidding. That's why everyone's so excited about them, right? But I feel like there's a but coming.
Yeah, there is. It's great that their revenue is way up, but their cost of revenue has also gone up, like almost 100% year over year.
Yeah, I see where you're going with this.
It makes you wonder about their profit, you know? Even with all that revenue coming in.
So are we saying they might be a case of, what is it, price to perfection?
Yeah, maybe. What that means is that the stock price right now is based on super high expectations for how much they'll grow in the future. It's like every single piece of good news is already factored into the price. So even a little slip up, like even a hint that their growth might slow down could really spook investors, and then, bam, people start selling.
Oh, so that's what they mean by that.
And this article does mention that growth could slow down in 2026 and 2027. So naturally, some investors are getting nervous.
Yeah, you can't blame them. It's like, imagine you're a student who's used to getting all A's. Suddenly you get a B. It's still a decent grade, right? But it's a big drop from what you're used to. So for a company like NVIDIA, that could be a problem. So what's causing this potential slowdown? Is it just more competition?
It's a little more complicated than that. The article suggests that some of their higher costs are because they're putting a lot of money into research and development and trying to expand into new markets. Now, in the long run, that's probably smart. It shows they're not just sitting around, they're thinking about the future.
Right.
But in the short term, it can really cut into their profits. And then investors start wondering if it was the right move.
So it's kind of risky, but also could be a big payoff.
It's wild how even a company like NVIDIA that seems to have it all can still have these pressures.
For sure.
Okay, well, speaking of companies that seem to have it all, let's talk about the Magnificent Seven. Apple, Microsoft, Amazon, Alphabet, Meta, Tesla, and of course, NVIDIA.
Yeah, the big guys.
They've basically running the market for a while now. But are they all really that strong? That's a good question. Because even though they get lumped together, they're not all the same. And some of them are facing some serious challenges.
Okay, interesting.
Like Tesla, for example. They're having trouble with sales, and all the stuff with Elon Musk isn't exactly helping investors feel confident.
Yeah, no kidding. I feel like every time I open the news, there's another story about him.
Right. It's nonstop. And then there's Apple. They're in a tough spot with their DEI policies.
Oh, right, yeah.
Trying to balance what their employees want and what everyone else is saying is never easy, and investors are definitely paying attention to that.
So we've got Tesla and Apple with some issues. And we just talked about NVIDIA. That's, 3 out of the Magnificent Seven. Are any of them actually doing well?
Oh, yeah, definitely. Meta, Google, Amazon, and Microsoft are all looking really good. Actually, some people think that because their stocks have dropped a bit recently, it might be a good time to buy.
Whoa, a buying opportunity, you say. Tell me more.
Yeah, but before we get too excited about that, we should probably talk about the companies that are kind of flying under the radar.
Oh, good point.
The ones that might not be household names yet, but have the potential to do really well. Are there any hidden gems in that pile of articles? There was one company that kind of jumped out at me, AMD. They've been making some really smart moves. Not a lot of fanfare, but in the semiconductor space, they're definitely doing something right.
AMD, huh? Okay, I'm listening. What's so special about them? What's got people buzzing?
Well, a lot of it has to do with their CEO, Lisa Su. She's been amazing. She's made some key acquisitions, and she's really good at integrating those companies. So basically, they're in a really good position to, take advantage of this growing demand for data centers and AI, which is kind of funny because that's where NVIDIA is supposed to slow down.
So they're going after NVIDIA's market. That's pretty gutsy. But why do they think they can actually compete with a giant like NVIDIA?
Well, one thing they have going for them is that they're really cost effective. They've got these chips that are like NVIDIA's, but cheaper. And that's a big deal for companies that want to invest in this tech without like spending a fortune.
Yeah, that makes total sense. Everyone's trying to save money these days, right?
Yeah.
But they still want the good stuff. Sounds like AMD could really shake things up.
Yeah, they could.
But, before we go too far down the AMD rabbit hole,
Yeah.
I wanted to go back to something you mentioned earlier about the whole market being in a holding pattern. What does that even mean? And what are the experts saying about what's going on with the economy in general?
Yeah, good point. It's important to look at the big picture, too. A holding pattern basically means that, it's not like a crazy bull market where everything's booming,
Right.
but it's not like the market's about to crash either. People are cautiously optimistic, but they're being a lot more careful about where they put their money.
So no need to panic, but also no reason to celebrate just yet.
Exactly. All these articles you sent, they all seem to agree that nobody really knows what's going to happen with the economy, interest rates, inflation, all that stuff. Plus, whatever's going on in the world politically, it's making people kind of nervous.
So in a market like this, how do you even know what to do? What should investors be focusing on? Like, what are the warning signs and what are the good signs?
Okay, well, one thing to watch out for are companies that have super high valuations. Their stock price is really high, but they don't actually have the earnings to back it up.
Well, like they're all hype, no substance.
Exactly. Just because everybody's talking about a company doesn't mean it's a good investment. You got to look beyond the buzz and see if they're actually making money and if they have a plan to keep making money in the future.
So we're not just chasing trends. We're looking for companies that are built to last. Consistent profits, real growth potential.
Exactly. But on the other hand, one good sign is when you see companies that are really embracing innovation and disruption. The world is changing so fast. The companies that are ahead of the game, those are the ones that are going to succeed.
It's like what we were saying about AMD with their focus on AI and data centers. It's like they're not just riding the wave, they're like the ones making the wave.
Yeah. Yeah, I like that analogy. And it really shows how important it is to be adaptable in this market. If you can't keep up, you're going to get left behind. You have to be able to see what's coming next and position yourself to take advantage of it.
So adaptability is key.
Mm-hmm.
But I think it's also important to remember that investing is a marathon, not a sprint.
100%. Don't freak out over every little dip in the market. Think long-term, invest in companies you actually believe in, and be patient.
Solid advice. I think we've covered a lot of this deep dive.
Yeah, we have.
We talked about some of the big tech companies and what they're struggling with, but also about some exciting new opportunities. And we talked about the importance of being adaptable and thinking long-term. But there's still more to talk about. So we're going to be back soon with part 3 of this deep dive. We're going to try to put it all together and come up with some key takeaways for everyone listening. All right, so we're back for the final part of our deep dive into the stock market. We've talked about a lot of stuff, from NVIDIA and how well they've been doing, but also maybe some things to be careful about, to those kind of under-the-radar companies like AMD and how they're doing some really interesting things. And we also talked about how the overall market is kind of in a holding pattern right now. So as we wrap all this up, I'm hoping you can help our listeners understand, what are the main things they should take away from all of this? The big picture stuff.
Yeah, for sure. I think one of the biggest takeaways is that things are constantly changing in the market. Like what worked before might not work now, So you got to stay up to date and be willing to adapt. It's not like the old days where you could just buy a stock and hold on to it forever. You got to be ready to change your strategy as things change around you.
So no getting comfortable, huh?
Oh.
We got to stay on top of things and be ready to switch gears when we need to. What else should people keep in mind?
Diversification is super important. Don't put all your money into just one thing. Spread it out across different industries, different types of companies, Don't get too attached to any one company, no matter how good it seems.
That's like classic investing advice, right? Don't put all your eggs in one basket. Spread the risk, check out different options, and don't fall in love with any one stock. What else?
Always remember that investing is a long game. Don't freak out when the market goes up and down in the short term. Focus on the basics. Invest in companies that you actually believe in and be patient. There will be ups and downs for sure, but over time, the companies that have a solid foundation and a clear vision for the future, those are the ones that usually do well.
Stay informed, diversify, and play the long game.
Got it. That's all great advice for someone who already kind of knows about the market, but what about someone who's just starting out? What would you tell them?
I'd say the first thing is to learn as much as you can. There's so much info online, in libraries, just about everywhere. Take some time to learn the basics, figure out how different types of investments work, and really understand the risks involved.
Yeah, don't just jump in without knowing what you're doing. Do your research, learn the ropes before you put any money in, right?
Right. And don't be afraid to talk to a financial advisor if you need help. They can help you figure out a plan that works for you based on your goals and how much risk you're comfortable with. Okay, so educate yourself, diversify your portfolio, think long term, and don't be afraid to ask for help. That's great advice.
Exactly. And remember, investing should be fun. It's a chance to learn and grow. Don't beat yourself up if you make mistakes along the way. Everyone does, even the pros. The important thing is to learn from those mistakes and keep going.
It's all part of the process, learning, adapting, figuring things out as you go.
Well, as we wrap up this deep dive, I want to leave you all with one last thought. Investing can seem really intimidating, especially when you're first starting out. But it doesn't have to be. If you have the right knowledge, the right mindset, and a little bit of patience, anyone can be a successful investor.
Totally agree. There's so much potential out there. If you take the time to understand the market, make smart decisions, and stick to your goals, you can really build a better financial future for yourself.
That's a great way to end this. Thanks for joining us on this deep dive into the stock market. I hope this was helpful and maybe even got you a little excited about investing. Remember, stay curious, keep learning, and never stop exploring the world of investing. And until next time, happy investing.